Victoria Scholar in London. She's a market analyst at IG Group. Great to have you back with us, Victoria. Now, we know the largest cryptocurrency exchange in the US, Coinbase, went public to a lot of fanfare last Wednesday, but we're seeing their share price has been hit as well. Why is that happening in the wake of these reports that capital gains could rise in the US?
Yeah, well, obviously it comes amid a highly volatile period for the whole cryptocurrency sector. As you mentioned, $500 billion wiped from the market in terms of Bitcoin, falling below 50,000 this week, just after it hit an all-time high earlier in April. And one proxy for investors for trading this market is the shares of Coinbase. This is the crypto exchange platform that went public in the US earlier this month. And there was a lot of optimism on its first day of trade. It was briefly worth as much as $100 billion on the NASDAQ, but actually ended up closing lower. And its shares have been struggling once again this week amid that crash in cryptos. We saw it drop by nearly 6% in Thursday's trade and is trading lower again pre-market today. Now, it's on its fourth consecutive day of losses and has been under a lot of pressure since that IPO. Now, as you mentioned, there are suggestions that part of that reason has been all about Joe Biden's plans to increase capital gains tax. But the sell-off began last weekend, last Sunday. No doubt this is adding to the selling pressure, though.
Yes, so Joe Biden's proposed, or reports of this proposed tax hike would essentially double the tax on the returns. On the super wealthy, we're told it just accounts for 0.03% of the US population. But nevertheless, that could impact I guess, the returns on those investments for the super rich. Why has that triggered a sell-off on Wall Street more broadly, and how could that impact the stock market going forward if those plans come to fruition?
Yeah, well, there's been a lot of opposition to these new proposals from the investment community already, as you might imagine. And it's interesting to see the market reaction because it's actually been pretty short-lived. US futures are already pointing higher in terms of what to expect at the open. That was after a very volatile session on Thursday. Goldman Sachs is saying it's actually expecting a scaled-down version of tax hikes versus what's being reported. And there's an interesting report in Bloomberg today about the last time we had a major capital gains tax increase, and that was at the end of 2012, and basically pointed to the fact that the S&P went sideways for a while and then ended up 2013 a lot higher. So I guess the point is that there is likely to be short-term volatility, and there are concerns. But perhaps longer term, the reaction from the market might be a little bit more muted.
Okay, Victoria Scholar from IG in London. Always great to get your analysis. Thank you for that.